I am a stock market investor, and today I'm going to show you how to invest your first $1,000 in the stock market. If you're completely new to investing, the very first step you have to do is to invest in your education. In order to invest in your education, there are two steps you're going to want to do. The first thing you want to do is to take advantage of free online material about the stock market. The best source of information out on investing is right here on YouTube. You can go to any investing channel and watch their videos on why they choose to buy certain stocks at certain times, and then you can just mimic their reasoning and mimic their strategies on how they invest. This will help you become a better investor like the people you see on YouTube. The second way you can improve your knowledge about the stock market is by purchasing a book about investing. A book I would recommend is called Rule 1 Investing. It's a book that I use to learn about investing, and it's a really good step-by-step guide on how to find a perfect stock. Another book I would recommend is actually my book. It's one I've written. It's really nice. It outlines step-by-step exactly how to buy a stock. I would really recommend it. I'm a little biased, but I think it's a good book. The book is called The Beginner Investor, and you can get it on Amazon. I'll leave a link to it in the description. Once you invest in your education, the very second step is to open up a brokerage account. A brokerage account is an account that will let you buy and sell stocks. It's what you use to trade in and out of stocks. There are many great brokerage accounts and investing apps that you can use. I would recommend Robinhood or any other brokerage that offers commission-free trades. It's really the most important thing that you should look at when looking for a brokerage is whether they have commission-free trades. Today, many brokerages are moving to offering commission-free trades. That means you don't have to pay a fee, which is typically $5 when you buy and sell stock. This is really important because it'll help increase your returns, especially when you're starting out with a small amount of money like $1,000 or $500. A $5 fee can actually be a big inhibitor in getting good gains. So once you have your brokerage account set up, the third step you're going to want to do is find the stock you want to invest in. This part can be a little tricky, so I'll make a video on it. But essentially, you're going to want to find two stocks that you want to buy. You're going to want to invest in two stocks so that you can diversify your money without overkilling it. So in finance, there's a concept called diversification, which means you don't want to have all your money or eggs in one basket. You want to be invested in many different companies so that your risk is spread out. You might be wondering why I'm only saying two companies, because that's not very diversified at all. And you're right. The reason I'm saying to invest only in two companies is because you right now only have a small amount of money. Psychologically, if you don't put a lot of money into an investment, you're more likely to not care about it, and you're more likely to just kind of do it without putting your own research and without patiently researching and selecting a good stock and entering it at the right price. If you only have a little bit of money in each stock, you're likely to be careless about each investment. Therefore, I want you to invest only in two stocks when you're starting out. It'll give you some diversification, but psychologically, it'll make sure that you are committed to each investment. When picking the stocks, I can make a whole entire video on it, which I probably will. But for now, you want to make sure that you're looking for companies that, one, you believe in. You know that these companies are going to grow in the long term. They have new products coming out, new services, and they are really popular, really trending. And you also want to look for companies that financially are expected to grow. You can go on Yahoo Finance under the Analysis tab and click, and there's going to be a metric called expected earnings growth for over the next 5 years. This will tell you the expected growth rate of the company's profits each year or over the next 5 years. You typically want to look for a number above 5%. And it's really ideal to have it in the double digits. You also want to buy the stock when its stock price is low relative to its historical stock prices. It indicates that the company is undervalued. In a future video, I'll explain more about stuff like PE ratios, PEG ratios, and how to know exactly when to buy a stock. But that's what you need to know for now. You need to look for a falling stock price, and you need to look for good growth, and look for a company that you believe in. Once you do that, you have purchased your first stock. Congratulations. I hope the information in this video was really helpful. Please drop a like and subscribe as this is my new channel. Thank you!